Hey, Top Gun Options traders, Matt Buckley, call sign Wiz, the primary model portfolio manager here at TGO. The market is getting absolutely hammered today because of European fears. What did we say on Tuesday? We said I was a seller of this rally, didn't I? I said, here's our dead cat bounce, our relief rally on Monday, our half a relief rally yesterday, and then just the European clown car continues. Holland coming out with, let's create some Eurobond product or something to help with our debt issue. And the Austrian finance minister calling that nonsense. And Angela Merkel, from the Chancellor of Germany, obviously just laughed that off too. It's an absolute train wreck, folks. Greece is going to end up leaving the EU. It's under what circumstances? And that's either good or bad. A disorderly exit, meaning, hey, everybody who loaned us money, Germans, Greek banks, sorry, you shouldn't have. Or are they going to actually make good on some of these? So as Greece goes, so will go Europe, because a lot of other countries with their debt problems are watching what Greece is going to do. And Greece is its own, they take pride in avoiding paying taxes. So it's a very different culture than a lot of other European nations and the United States. But guess what? We've talked about it before that California is our Greece, and we're going to have problems with that. So markets obviously getting just slammed today. Who cares? In our model portfolio, we're doing great. We were up a little bit earlier today, and we're flat. On days like today, when the market's down 135 points, this is exactly what I want to see. Our hedges are working. Some dollars, some volatilities. Our short positions are working great. Our GMCR calls are looking great. I love trading in these market conditions because you can see what's coming, and it cracks me up. And we talked about the CNBC effect. Monday, Tuesday, they're like, "Is this the new rally? Are we off to new highs?" And then today is, they're playing like Jim Morrison, The Doors. This is the end. So we're going to ignore all that, and we're going to focus on continuing to potentially make profits in our model portfolio. We're going to go back to the well for our buddy Google. Love Google. We've had about 4 profitable trades in a row. Iron Condors on Google. If you're new to our trade alert service, Google, we've traded the heck out of this. Especially, you see that E right there is earnings. So on April 12th, they came out with earnings and actually beat at $10.08. And what did the stock do? It gapped down. Why did it gap down? Well, Google announced that they were going to do a stock split. And the new shares they were going to issue were non-voting shares. So stock under a lot of pressure. Found some support around the 600 level, and it's been flirting with that ever since. Obviously, in the past 10 days sell-off, it's taken it on the chin. But again, really not breaking that 560 support line. So I want to put on a nice conservative iron condor on Google, and let's take a look at it. Let's go ahead and build it here for June. Going to be right down the fairway, nice conservative, the 565, 560. So obviously, if you're new to options, an iron condor is simply 2 vertical spreads. It is a bull put spread where we're going to sell, and I hit create spread on my TradeMaster platform, hit iron condor, and I usually just go right away to add or adjust legs because it's a little quicker for me just to navigate around than have the auto form populate here. So the iron condor I'm looking at is selling the 565, buying the 560, puts as a hedge. So this becomes, and we'll do it 15 times based on our risk, this becomes our bull put spread. So we want Google to stay above 565. It hasn't been below 600 in a while, and we think 600 is a support level. So there's a nice cushion right there. For the bear call spread, the other side of our iron condor, we want to buy the 660s as a hedge, the 660 calls, not 560, 660s. And we want to sell the 655s. This makes our 655s. There they are. This makes our, and we obviously have to add 15 lengths. This makes our iron condor, a bull put spread and a bear call spread. Now let's hit create order and see what we can get it at. $70, $60, $90, $45. How's a $1.05 look? Is that close to mid-market? No, my mental math was off. Put this in at about maybe $1.20. I think we can get it for right around there. Let's analyze it and take a look at our risk. Yep, we're just north of our maximum risk. We never risk more than 5% on any one trade in our model portfolio, so I'm comfortable with this just being a little north of that. So the risk to reward ratio is good. It's about a 69% probability of collecting a full $1,800 on this trade, and the probability of maximum loss is only 25% of incurring that max loss. That ain't going to happen. Why? Because if you incur a loss in your paper trading account in one of your short spreads, your bull put spread or your bear call spread, get out of that leg. Get out of that unprofitable leg when you lose more than the 50% credit on that leg. That is what we call our eject criteria. As far as spectral analysis and the Greeks, obviously we're selling something, so theta is our friend. Time decay works for us in this situation. So you can run this on Trade Monster and you can see down here, theta, $54 a day, then it starts to accelerate day by day by day exponentially until we get close to expiration, and then it just obviously drops down to zero there. So I like this trade. I'm going to create an order, get it into our model portfolio. Looks like we can still get it at $1.20. So that is the Google 15 times June 560, 565, 655, 660 iron condor. So I'm going to confirm that, bringing in a credit of $1,800 into our model portfolio. And like I said, everything else is looking good. Steady as she goes. I'm liking what we're seeing, especially with a couple of our weekly positions here, these GMCR 26 calls. Happy about those. And our weekly Apple trade has made $3,000 since Friday. So what's that? 3 days? That's it's $1,000 a day. It's not too shabby. So there's your trade alert for today. So we have two of them for this week. If the market's getting crazy or nutty the rest of the week, I might throw one out there as a benefit there for my buddies. So there's your trade alert. And I'm Matt Buckley, call sign Wiz. Happy hunting. Make sure you hedge.